There is no doubt in my mind that this pump that we're seeing in crypto is due to the midterm elections. Politicians want the market to look good. So in this video, I'm going to show you how you can safely short the market and generate passive income while being in the position. I'm going to show you how to virtually eliminate your risk of being liquidated from the position. So that way you can sit in the position as long as you want and generate as much passive income as you can. And I'm going to provide overwhelming evidence as to why I think we have further down to go in the crypto markets. Keep watching. Before I get into this video, I do have to say this is not financial advice. Please consult with your financial advisor before making any investment decisions. This is for your education purposes only, and this is just my strategy and I'm showing you. Okay, so you hear a lot of people talking about, oh, the midterm elections, a year after, things are usually bullish. But in my opinion, they're not going on the right data, and I'm going to show you why here. So this is a chart showing the S&P 12 months after a US midterm election over the past 70 years. Keyword 70 years. So you can see a year after the midterm election, the market usually pumps 18%, 33%, 12%, 29, 14, 11, 20, 5, 23. And we see a downtrend here in 2018. It pumped 11.9%. Now, this is why this isn't as relevant if you go back 70 years. There's a thing called the long-term debt cycle. We have cycles within cycles. So going back 70 years, there has never been a time like this. Keep in mind, we just printed the most money that we've ever printed in history. And we're on the verge. I'm not going to say it's going to happen, but we are on the verge of a depression. Like, it can happen. Like the last depression, the Great Depression was in 1932, 1933 after the Roaring 20s. So if you go back 70 years, you're pretty much looking at the secular bull market. You're not taking into account the Great Depression years when there was a reset that needed to happen. Remember, after the Great Depression, three things came into play. The Glass-Steagall Act, which didn't allow commercial banks and investment banks to do the same business. You had to be a commercial bank or an investment bank. You couldn't do both. The SEC was invented to protect investors because so much money was lost. And then you had the Federal Deposit Insurance Corporation that was also invented so that every $250K per account to make people feel secure. And also, that's when 401ks came into play because people weren't getting back into the stock market because people had lost so much money. So they made all these things to try to trick people into thinking, oh, everything's safe, you can hop back into the markets. So all that stuff came with an event like that. And people are comparing this to 70 years. Like, it's not the same. It wasn't the same in the past 70 years as we are now. So the data is skewed. Let's go on to the next point. Midterm elections tend to be weak, but the following year is typically strong. The S&P 500 during an election cycle since 1932. Okay, this one goes back to 1932, but that was only 1 year to compare it to. Like the Great Depression was like this time now. So okay, you can compare it with 1932. But if you add all of the other election years, you kind of skew the data because you have to average it out. So if they would have just did 1932 versus now, that would have been a more fair comparison. But just going back to all of them, these are vanity metrics. Like, I understand people want the markets to be bullish, but you want to look at the facts. And then this shows average midterm election years versus all other years. Now I want to show you something else. The markets were pumping, even the S&P, the Dow, and the NASDAQ were pumping into the FOMC meeting that we just had, November 2nd. And the reason why I was pumping was because people were wanting to see if Jeremy Powell was going to hint at a pivot, like basically saying slow down on rate hikes. But he did nothing of the sort. He said, we need to get inflation under control. We don't see a pivot in the near future at all. And then that's when we saw the markets dump. And I'm going to show you guys that on the chart. Look at how fast the Federal Reserve is moving to tame inflation versus any other time in history. Look at how aggressive the rate hikes have been. And this goes back to just 83. So, it would be nice they can go back further, but still, there's never been an aggressive a rate hike as aggressive as this, other than the Paul Volcker. But they can't do that because debt to GDP, the disparity is too large right now. It's over 100%. Back then it was 20% or in some change or whatever it was. I don't know the exact number. So you got to keep in mind, we have not seen the implications of these rate hikes yet. Their companies still have money to pay off this debt because they've been borrowing so much for the past decade. So as the rate hikes get higher and higher and they start to dip into their treasury more and more, they don't want to sell their stocks. They don't want to sell their crypto, but eventually they're going to have to, or else they're going to lose everything. So that's something to keep in mind. Here's another chart. This year's market performance has already diverged significantly from the average midterm election year. So it's like people are going off that data, But look at this year compared to the average. The average performance during US midterm election years from the S&P, you see the orange line. Now look at this year, just in the downtrend. And now look at this play by Fidelity, one of the largest asset managers in the world. And again, I'm proving my case as to why I think the market still has further down to go. Fidelity is launching commission-free crypto trades for retail investors. Let's talk about this. If you're Fidelity, it's not like you're hurting to make money. They know the current sentiment in the market. So keep in mind, they have a lot of high net worth individuals that they're trying to make money for, so they can make fees off of them. So they're looking, in my opinion, this is a thesis, this isn't guaranteed, but you always want to look at the incentives behind everything. They're looking for exit liquidity because of all the things I just told you and more things that I'm going to tell you in this video. What better way to sell and offload your assets than to novice retail investors and just say, hey, if you want to come buy some crypto, buy it here for free. They're trying to offload their bags to these naive investors. To me, it's pretty obvious. Is what I think. Let me know what you guys think in the comments, and definitely hit that subscribe button as we're trying to grow the channel. So let's look at some technical analysis and just keep proving our case more and more. And remember, at the end of this video, I'm going to show you how to make passive income to short the market, something you could never do in history. So if you look at this is the same line I've had on the chart for months. We see the S&P going down. Since Jeremy Powell didn't hint at a rate hike pivot, we're seeing the market drop. And I do think we're going to get into this box and even go a bit lower. These are pre-COVID levels here, okay? Let's look at the Dow. Same thing. And it's looking like we're about to, this is a high conviction trade. We're retesting the trend line zone, the 200-day and our 62 EMA, and we're about to drop down. It's a high conviction trade. If my hedge fund could play in equities, I would be shorting the Dow and the S&P as well. Let's take a look at the NASDAQ. Same thing, just dropping and dropping. And I already showed you guys in the last video, Netflix, Google, Meta, the blue chip companies are dropping as well. And Apple, oh yeah, they're holding up good, but they're in the middle of one of the largest stock buybacks in history. They're not going to be able to continue that forever. So there is more blood to come. So now let's look at crypto. If you guys notice, I have some arrows on the chart here. I'm going to get into that. So if we look at 2018, when the bottom set in, we saw this line of resistance going down and a straight line of support before the market bottom fell out. And this was a 41% drop where we saw the bottom for like 6 to 8 months at around $3,000. Now we have that same pattern setting up here. And I've already went over this. And now we're getting that touch to the top right before midterm elections. I think the bottom is going to be between $13,000 to $15,000. Okay, and my target to start getting out of my short is between 15 and 16, just to be safe. I'm going to start dollar cost averaging out of my short. So let's go over some things here. Okay, we saw Tesla dump 75% of their Bitcoin holdings. Keep in mind, this was at a loss. Why else would they dump their Bitcoin at a loss if they didn't think it had further down to go? We saw here during the Q2 earnings report, they revealed that they sold off 75% of their Bitcoin holdings. So if we go back to our chart, Q2 was pretty much from April to July. So during this time, Tesla sold off their Bitcoin. They're a big reason why the market dropped. Now, all these YouTubers and influencers calling for Chamath Palihapitiya calling for, the bull market to be back on. Why are we not seeing these companies like Tesla and these large firms buying Bitcoin? They have access to the best data and analytics that money can buy because they think it's further down to go. They know this isn't the bottom yet. Like look at this setup. Okay, let me give you more data. Now we can see the top here, right? The top was pretty much last November. Now you see this green arrow. What happened during this time? I'll tell you. President Biden was trying to get oil under control, and as you can see here, we're on the whitehouse.gov. They released 50 million barrels of oil from the Strategic Petroleum Reserve to lower prices for Americans and address the mismatch between demand and supply during the pandemic. And in case you're not familiar with the Strategic Petroleum Reserve, it's an emergency stockpile of petroleum maintained by the United States Department of Energy. It's the largest publicly known energy supply in the world. Its underground tanks are in Texas and Louisiana and have capacity for 714 million barrels. In October 21st, the inventory was 401 million barrels. So this article was published November 23rd. Let's look at the date on our chart. So you see this green line, this is on November 23rd. This was pretty much the top for Bitcoin. Like if we zoom out and go to the weekly chart, this is around the top. So when Biden tried to, make oil drop, we saw a 70% drop from that action. And just to give you an idea on the oil chart, remember that was November 23rd. He said he was going to drop the price of oil by releasing the strategic oil reserves. It worked for a second, for a week or so? And then look what the price of oil ever since then from the bottom, went up 109%. So it didn't work. And now here we are 1 year later, and look at this. The US has 25 days of diesel supply, the lowest since 2008. Oh, what's the big deal about diesel supply? I don't know. It's just the fuel that's used in trucks to transport food across the United States, not just the United States, everywhere around the world uses diesel fuel. I'm not sure if jet fuel is diesel fuel, but if we can't move food and different things to our homes, people will starve, start to kill each other. So this is a really big deal. Think about that. And now here we are again, October 18th, 2022, this was said. And Biden is announcing he's trying to decrease the price of oil again. So he's saying that the Department of Energy is issuing a notice of sale tomorrow morning for 15 million barrels of oil from the strategic petroleum reserves to be delivered in December. This sale will complete the historic 180 million barrel downturn the president announced in the spring, which helped to stabilize crude oil markets. So literally here we are again, the same point we were in last November. Remember what happened? Boom, 70% drop. And now he's about to release more oil from the strategic petroleum reserves. What do we think is going to happen? It's a high probability that Bitcoin's going to drop again. And not just Bitcoin, Ethereum, stocks, the entire crypto market, all market. So I already showed you why I think the crypto market's going down. I told you my target for Bitcoin. But my bigger short is in Ethereum. Why? Because the chart's just a lot cleaner and Bitcoin is more battle tested and more accepted. So we have Ethereum pumping to midterms as well. We have it at 1585. I took out my first short in Bitcoin at $24,010. And I took out my short on Ethereum at $1,910. Okay, and I just doubled down on my Ethereum short at 1,556 and 1,554. So I'm still in the green on both of my shorts, but I think we'll see a $600 to $700 ETH, which is more than a 100% return right now, not factoring in if you use leverage, depending on what leverage. So I'm gonna show you guys how to use leverage in your short, minimize your risk of getting liquidated, and the cool part about it, get paid passive income to sit in the position. So now you don't have to rush because you're getting paid. And the application we're doing this on is Radiant Capital. So I showed you guys this before. I've already done 2 videos on Radiant Capital. I'll leave them in the description if you want to check it out. Why I think it's a 100x altcoin when the next bull market comes, whenever that is. So they're a fork of Aave, which is a money market, which allows you to deposit collateral and borrow against it through an over-collateralized way. Meaning, let's say you want to borrow $100, you have to put in $150 in collateral, just as an example. This way, the platform can't lose money. So you can see here, I have $110,000 deposited and borrow $60,000. And I have a health factor of 1.55. You get liquidated once your health factor goes down below 1. Okay, so I always like to keep mine above 1.3. And as you can see, I've already claimed my rewards a few hours. I should have let it build up so you guys could see it. But just through providing collateral, I'm getting paid these APRs here. Okay, so pretty much 3% on Bitcoin, 3% on Tether, 3% on USDC, 4% on DAI, and another 3% on ETH, okay? And then when I borrow, this is the passive income part. When I borrow, I'm getting charged 8.5% on my Bitcoin, but I'm getting paid 15.8% in Radiant tokens. And that's on top of all of this as well, all my collateral. Same thing with ETH. I'm getting charged 8.08%, and these fluctuate based on supply and demand. But I'm always getting paid more than I'm getting charged. It was 2 days where I wasn't. And then I'm getting paid 16.8% APR in Radiant tokens, okay? So now the answer is, hey, can I claim these Radiant tokens? What do I do with them? Well, for me, these, when you provide your collateral, you get to vest them, okay? So if I go to manage Radiant, I'm making around $40 to $50 a day. I mean, it's saying 31 right now, but I'm going in here and I'm claiming it every day, so I know. So I'm going to vest this here right in front of you. You click vest, you confirm, and then boom. Now you're vesting, earning more APR. And now once you claim these over here, this all goes to your collateral. So I make around 30 to 40 from vesting. In my vesting, I get to vest every day. and I'm getting around 40 to 50 for my platform revenue. So I'm making about 70 bucks a day, and that is also determined in Radiant. And again, this is the cool thing I like about this platform. With Aave, okay, great. You can borrow, deposit collateral, and take out a loan. Okay, great. Aave, the platform, makes money off of that. I'm really bullish on the narrative on real yield protocols being what ignites the next bull market. Protocols like GMX, like radiantcapital, that shares their revenue with you. And I'm not talking about token inflation, like their actual revenue. So how cool would it be if on Aave, you got a portion of the borrow and lending fees? Well, that's what you get on here. And since they've launched, they paid over $4 million to stakers. So you, in order to do that, you lock the Radiant token. This was 129% APR. Right now it's at 60. It goes up and down. I've seen it as high as 5 to 800. But basically, you go here, you claim this, confirm, and then boom. So I just claimed the 71 Radiant tokens. I hit max. I hit lock again, confirm, and boom. I'm literally getting paid passive income to short. So let's talk about this strategy a little bit more. If I go to this dashboard, the way I short it is I looped it. So I'll go over the real numbers with you. So I put $15,425 in collateral in USDC. And the reason why you want to use your collateral in USDC, this is very important, is because you get liquidated once the value of your collateral fluctuates. So if I use Ethereum and Bitcoin as my collateral and then Bitcoin drops, it's going to drop my health factor and then I can get liquidated. But I don't have to worry about that with USDC. It's the most secure stablecoin in my opinion. And to be honest, in times of high selling, the price of USDC and stablecoins go up because it's a higher demand for them. The price of them go down when a lot of people are buying the assets because they're selling USDC to buy crypto, Bitcoin and Ethereum or whatever they're buying. So the market can go up and down. I could use put a portion of Ethereum as collateral as well so that I don't get liquidated on the upside. But with all the stuff I just told you and the Federal Reserve raising interest rates is not any catalyst. And the halving being 2 years out, there isn't any catalyst for me to feel like, Ethereum is going to go up 50% and liquidate me, or Bitcoin is going to go up 150% and liquidate me. Okay. So, and if it did, I would just add more collateral and still be patient because I'm convicted in this trade. So deposit $15,400 to borrow $24,000 in Bitcoin. Then I sold that Bitcoin for USDC, deposited pretty much $12,000 in collateral again to borrow 5 ETH at 1900. Sold that ETH for USDC again, deposit as collateral again. So you see how I'm looping it? This allows me to use leverage, but not in the same way. And given that this platform is trying to bootstrap liquidity, they're getting paid. And I feel safe with my funds on here because they had not one but 2 smart contract audits by Solidly Finance and PeckShield, 2 very reputable auditing firms. Most platforms, they'll get 1, but they're getting 2. So it shows that they're serious and they're a fork of Aave. Aave's battle tested, so that's another thing. So they forked off a very secure protocol that's been battle tested, and they got 2 smart contract audits on top of that. And they're utilizing the Stargate Layer 0, which allows you to deposit collateral on one chain, borrow on another chain, and pay back on another chain. So it's solving that whole problem of, dead liquidity moving around from chain to chain. Like it's really a revolutionary platform, and I feel comfortable. I'm not even buying this altcoin. I'm accumulating it passively. I feel comfortable holding it because the real world utility, and not just the utility, the timing of it. So when the markets are dropping, people are going to take on leverage to short. And when the markets are up, people are going to take on leverage to long. So platforms like this get used no matter what. So I feel comfortable using it. And then, I told you I doubled down on my short as well. So I pretty much just did that same thing. Okay, and now let's talk about vesting and locking. So when you get your Radiant tokens, I said you could you could lock them, or you could sell them if you want. Sell them for ETH, whatever you want to do. But when you lock them, you get platform fees and a share of penalty fees. What are penalty fees? When you vest your tokens, you can unvest them. But when you invest them, you take a 50% haircut. So if you vest $100 worth of Radiant tokens and you want to take it out early, even if it's the 27th day, you have 28 days for it to go through the full vesting period. If you take it out early, you're taking out $50 instead of $100. And now that penalty fee goes to the lockers, people who are locking, people like me. But when you lock it, you can't unlock it until the 28 days is over. And the cool thing is, after the 28 days is over, you can leave it locked and you can still earn that extremely high APR. So I'm just constantly coming in, locking it. If the market's down, I'll sell it, buy some ETH. But right now the market's up. And if we look at the Radiant versus ETH chart, Radiant for the past few weeks has been a better hold than Ethereum. Or I should say the past few weeks, the past month. This is Radiant versus ETH. And then if we look at the 4 hour, this is a trend reversal. So we saw it going down, down, down. Now we're seeing it make higher highs and higher lows, which is the definition of an uptrend. And you guys are probably wondering like, oh, how do I get funds on Arbitrum? Well, you can buy some Ethereum or USDC on your Coinbase, send it to your MetaMask, and I'll leave the link for this spreadsheet in the description. But it basically shows you how to get money from whatever chain to whatever chain. So if you go from Ethereum to Arbitrum, the best one on here is Seabridge. So that's pretty easy. So in closing, I gave you every reason why I think the market still has much further down to go. Overwhelming evidence. I showed you how you can make passive income to short, sit in a position comfortably without worrying about having to get liquidated on a safe platform. Again, this is not financial advice. Consult with your financial advisor and start small. Like, don't bet the whole farm on this. This is a small percentage of my portfolio, okay? So if you like this content, please like, comment, subscribe. Let me know your feedback. Let me know your strategy. Let me know something you think can help me or help someone else watching this. Share it with someone else who you think may get value. And if you want to learn more passive income / yield farming strategies, click the link in the description to fill out the Google form so you can request access to get inside of our Discord. We're going to be launching in the next 2 weeks. It's going to be the best, most different yield farming education platform in the world, and I'm a part of all of the groups. So with that, I thank you guys so much for tuning in. I love all of you, and I will see you in the next video.